We've got a great headline here. I don't generally post on every news item that comes up, but I thought this is a good one and you really ought to take a look at it. So MicroStrategy is one of the corporations that's listed on NASDAQ, and during the quarterly call, they started to talk about Bitcoin. And I thought that was very cool. So let me tell you what they said. Earlier this week, it was on Tuesday actually this week, Bitcoin received a boost from an unexpected source, MicroStrategy. It's a NASDAQ-listed business, an business intelligence company, and it made public that they purchased 21,454 Bitcoins for a total value of $250 million. Okay, this is a major company. Major companies don't generally buy crypto or Bitcoin, and if they do, they generally don't talk about it, okay? Because as you saw in some of these other videos in my training stuff, a lot of people think Bitcoin is really flaky and it'll go up and down in value so much that you can't count on it to be a safe store of value. But take a look at what he says here. Per the CEO, Michael Saylor, our investment in Bitcoin is part of our new capital allocation strategy, which seeks to maximize long-term value for our shareholders. He further notes that MicroStrategy has recognized Bitcoin as a dependable store of value. That's a big deal. A lot of the pundits out there are saying you can't call Bitcoin a store of value because it fluctuates in price so much. And now here is the CEO of this company, and it's a big company, that says that Bitcoin for them is a dependable store of value, and it's an attractive investment asset with more long-term appreciation potential than holding cash. All right, let me translate that for you. Bitcoin is going to be worth over time more than the US dollar. That's what he's saying. Cash versus Bitcoin. And so they have accordingly made Bitcoin the principal holding in its treasury reserve strategy. So what he's saying is if they've got extra cash, it goes into Bitcoin. It doesn't sit around as cash. And then if we go down here a little bit farther, we stated a few months back when Paul Tudor Jones, now this is another hedge fund manager. He came out publicly and said that he was petitioning on Bitcoin, and that now it's only a matter of time until we see more of this from the other major movers and shakers in the financial universe. Big deal. When a large player comes out publicly showing support, it gives other validation to do it too. So there's a Me Too thing going on here. And if you want to call it a FOMO, that's fear of missing out, that's going on too. So I thought that was very interesting. Jeff Dorman, the CIO of Arca, says that MicroStrategy's Bitcoin investment has potentially let the genie out of the bottle on two issues that could have lasting effects on corporate America and on the banking industry. So this is pretty cool. Every other corporate finance team at public companies saw the 10% move on MicroStrategy's stock price. So MicroStrategy's stock went up 10% just because they said they bought Bitcoin. Can you imagine? Back in 2017, 2018, everybody was trying to include blockchain in their products, in their name, everything else. And now, 3-4 years later, now they're talking about Bitcoin as the substitution for a cash position. And what he says is, this is going to make a lot of the other corporate finance teams want to be thinking about this too. And then the second reason, lost in all of this is the utility of owning Bitcoin or another stable asset like Rcoin. Now, he mentioned Rcoin here is because his company created Rcoin. Okay, so that's why it's mentioned. I've never heard of Rcoin. The thing I'm looking at here is Bitcoin, and this matters. So owning cash means you need to have multiple global You need to have multiple global checking accounts with different banking hours and expensive wire fees. Plus, you need to try to earn a yield on your float by parking the cash in various money markets and other yield-bearing instruments. Let me translate that part of it. What he's saying is that he says if you have cash and you need to move it, it's hard to move and it's expensive to move. And then on top of that, what you've got to do is you've got to find some place that you can just temporarily park your money so it'll earn a little bit of interest so that the cost of transferring your money from one country to another doesn't wipe out whatever you've got in your kitty. And then he goes on to say, plus you can't do anything with your cash on the weekends. Now, I haven't talked about this anywhere, but the Bitcoin market is open 24/7 all the time. There is not a time when it closes. And so that's what he's referring to. Most of the markets close on the weekends. And so you can't do anything. If over the weekend your cash position goes to crap because the US dollar goes down, there's nothing you can do about it until Monday morning, and then it's too late. Whereas owning just Bitcoin or Altcoin can reduce your reliance on third parties. Oh, yeah, remember that reliance on third-party thing? He's talking about banks. It can lower your transaction costs and can increase payment flexibility. So he says the aforementioned notion is extremely interesting because the heightened correlation between gold and Bitcoin in 2020 shows cases how Bitcoin is well on its way to becoming the preferred store of value. There's that store of value word again. Asset globally. Now, let me tell you what that means. If Bitcoin becomes the preferred store of value globally, it will also become the world reserve currency. That means every currency will be measured against Bitcoin. And I'll talk about this in a different post, but up to this point in time, literally up to this day, it didn't matter because the US was the big dog, China and Russia were fighting the big dog, and everybody wanted supremacy of their money. The US is the reserve currency of the world. And because of that, we don't have to worry what our currency is worth. And just let that sink in for a minute. I won't go any farther on that, but we need to talk about that. So right now, here's a almost 75% correlation of Bitcoin and gold for the correlation. I was just editing this and I realized you probably don't know what correlation means, so let me explain that. A correlation simply means how tightly things are bound together. So if there's 100% correlation, every time something moves, the other thing moves, just like a Siamese twin. If there's zero, then there's zero. And then finally, there's a negative correlation. So that's more like magnets. You put one magnet against another one, it jumps away. Now, the long-term correlation will go away. And the reason it will go away is simply because they are not correlated. Gold is a completely different kind of store of value than Bitcoin is. Gold and Bitcoin are not correlated, and you will see this line right here, down here at the bottom, go lower and lower and lower and lower until it gets back down here into this zero. One of the things he talked about was the efficiency of Bitcoin. So here's an example. Bitcoin's network efficiency has numerous examples of large amount of money being moved almost instantly and with a minimum fees, which could be a game changer in terms of cost reduction for public companies. So companies that are multinational companies have to move money all the freaking time. And every time they move money, it costs them a percentage of the money that they move. So they actually lose money every time they have to do a deal in another country. So think about that. Now here's one. Total output in dollars. Half of what? $500 million? Yeah, $500 million, more or less. Costs $8.72 to send somewhere else in the world. Can you imagine? $8.72, $500 million. You might just for grins log into your bank and see how much it cost you to transfer that much money. It would be an incredible number, and it's definitely not $8. It's going to be expensive. So on the surface, Microsoft's strategy for Bitcoin allocation has a potential to be the first domino in fulfilling Satoshi's I can't say his name right for some reason, Satoshi's vision of a global decentralized finance system and thus further validating it as a store of value, a reliable payment network, and a medium of exchange. That is the qualification. That is a majority of the qualifications for money. And this is a big deal because MicroStrategy moving to this makes it so that they are now the low-cost player in the services that they offer. Because worldwide, they can take that money and plop it somewhere else, literally within an hour. And then they can use that. And if their partners are starting to deal in Bitcoin, they don't even have to go to the local currency. They can just say, oh, you need $1 million? Here's $1 million. Done. All in Bitcoin. This is so big. This is so big. Okay, so let me just click on one or two other things here. Purchases 25 million. Here's another thing on it. Key points. MicroStrategy took months of deliberation before settling on purchasing Bitcoin. The firm said it expects negative real returns on US dollars. What does that mean? That means inflation is going to take over. Okay, it means regardless how they try to invest US dollars, they will not make a profit on it. Their interest will not be enough to offset how bad the dollar is going to be. That's what that means. And the company is seeking maximum long-term value to its shareholders through Bitcoin. So it's already said that's how it is. Now, I saw this morning a very cool thing. Somebody came up with a chart like the one that I said they really need to come up with. And I don't have it here. I'm going to do a separate blog on it. But if you put Bitcoin as the base and you say, how much has the US dollar changed in relation to Bitcoin over the last 7 months? Okay, it turned out, I remember the number was 66%. So that means if you had your money in Bitcoin, you would have made 66% on your money between the first of the year and now. 66%. That's a lot of money. And there were others. Brazil was 126%, I think. And I think what's going to happen very soon now is you're going to be able to look up on the internet and you're going to be able to see how much has my money lost or gained value compared to Bitcoin over the last whatever amount of time. Okay, well, and the whatever, it can't be more than 10 years because Bitcoin's only been around for 11 years. But that's what's going to start happening. So if you had taken all of your money, put it in Bitcoin on the first of the year, this year, you would be up 66% right now. Okay, and most years are like that or better. Some years, and they think next year is going to be that year, it may go up 10 or 15 times. We're really on the cusp of things. And the final one I wanted to show you here right quick is MicroStrategy becomes the first listed company to buy Bitcoin as part of its capital allocation. So very cool. And here's Bitcoin price right now, right this minute on Friday, August 21st at 1:05 p.m. Mountain Time. So this is the one thing that I wanted to point out here. Our investment in Bitcoin is part of a new capital allocation strategy which seeks to maximize long-term value for the shareholders, said Mike Saylor. He is the CEO, and this investment reflects our belief that Bitcoin, as the world's most widely adopted cryptocurrency, is a dependable store of value and an attractive investment asset for more long-term appreciation potential than holding cash. So basically, he said just what I did. He said, over the last 7 months, Bitcoin's gone up 66% compared to the US dollar. Who wouldn't buy it? That's literally a no-brainer. And the internet is abuzz with this announcement because everybody's saying this is giving the big companies the okay to go ahead and buy into Bitcoin. Now, I'm going to give you the other half of it. Why should I care? You should care because let's say that the Fortune 100 companies decide they're going to buy into Bitcoin. MicroStrategy isn't a Fortune 100 company, but they managed to pull together $250 million from cash just sitting around. Can you imagine what the Fortune 100 companies will do? Bitcoin is a scarce resource. There are only a certain number of them out there. All of them are locked up in somebody's wallet. There are some people who are willing to sell Bitcoin right now for a price of $11,713.39. The price wanders around this area for a while. There's a limited supply. If somebody says, I'm going to put $100 million, and 100 of those companies say, I'm going to put $100 million, okay, well, they are competing for the available Bitcoin at whatever price somebody is willing to sell it for. Supply and demand. I may talk about law of supply and demand here, not sure, but what it means is if there is a scarce resource, and Bitcoin is a scarce resource, and a lot of people want it, the price goes up. That's how it works. If there's a scarce resource, a lot of people want it, the price goes up. Let me give you a quick example. Diamonds. There are more diamonds sitting in Amsterdam than there are in the entire world on people's fingers. Why doesn't De Beers just release all of the diamonds? Because then they wouldn't be worth as much. That's why. And so they dribble the diamonds out, and because they dribble them out, they are perceived as having more value. Now, quite frankly, a diamond is a clear rock. That's all it is. It's just a rock. Why are you going to spend $10,000 a carat on a diamond? Really? Because somebody believes that's what it's worth, and I give you complete honest odds. You walk into a diamond store and say, you know, that's a really pretty rock, but I'll take it for $10. Nobody's going to sell it to you for that, because that's not the market. This is the market. Right here, right now. This is the market. If you put in a demand for several $billion worth of Bitcoin, that number is going to go up. And in fact, they say, this is a they say next year this number should go to at least 100,000 and quite potentially to 1 million next year. Okay, that's why I get so excited about this. Get into it. Okay, I'm not a financial advisor. I'm not an investment advisor, but this is one of those slap your head, I could have had a V8, right? You need to learn how to do this now. Go to the rest of my blogs. I teach you how to do it. Get into it. That Tudor Jones guy, he said put 1 or 2% of all of your holdings in it. I think that'd be great. Don't stampede. Get to understand what this is. Look it up, do some research, and when you get to the point that it's right for you, jump into it. But please don't wait too long. This is one of those lifetime experience things that the opportunity is simply going to evaporate. So get in. All right, this is Dr. Darwin. That was a long blog, but it's so cool. MicroStrategy, big deal. Talk to you later.